So hey guys, and welcome back to the channel, and today we're back with our monthly Python algorithm reviews. So yeah, we have 3 strategies running every month. We review them, so let's get straight into the Jupyter notebook. So basically every month, for anyone new here, we identified like the best stocks out of the whole universe of US stocks. So that's like over 6,000 stocks. We identify over like about 700 per month, and the only ranking or like data point this is based on is just Sachs rank. So if their rank is 1 or 2, we buy them, hold them for the whole month, and then evaluate the performance over the entire month and compare it to the baseline, which is the S&P 500 for us. So of course, the war happened this month, so it's a terrible return of nearly 5% basically for our strategy compared to the S&P's -3%. So yeah, horrible month. It breaks our streak of beating the S&P, but we're still above it on the long term, and you'll see the results later. But yeah, terrible month for our main strategy. And then for our 3 sort of sub strategies that we run, which are sort of tracked 1 month back, because you need to evaluate that a bit differently for that. The first one is earnings. So this one, the idea is quite simple. You buy a stock before its earnings, and you evaluate the performance. You're basically trying to predict stocks that will be earnings. And the way we do that is not only Zacks rank 1 and 2, also needs to be posting earnings in the day, right? And then the main thing is the EPS percentage, which is this line here, has to be bigger than 0. So what this metric is, again, provided by Zacks, analysts think this stock has a bigger than 0, bigger than 50% probability of beating earnings. And then, yeah, for the month of between January and February, it identified 123 stocks that were posting earnings and that were also predicted to beat. So you may know some of these, for example, like BitDay, Expedia, Morgan Stanley, and then yeah, again, this is just evaluating the performance of all those stocks. So the 123 and 2.6%, the S&P had a negative return, so this is quite a big outperformance for this strategy. Now going to the dividend strategy, this is the more slow term, sort of safe one. It's called the dividend capture strategy, and there's kind of mixed reviews in literature. Does it work? Does it not work? When including transaction costs, taxes, all of that. But what you're trying to do is buy stock before the X date, capture the dividend, and then sell the stock in 1 month and hope that the stock has gone up by more than the drop from the dividend on X date, basically. So again, the only main sort of factors are, again, it just needs to be Zacks rank 1 or 2. We also have a yield filter here, so we don't really care about the tiny dividend yields. The dividend yield of the stock annually needs to be more than 2%. And then again, it just needs to be having that X date between the month where we're evaluating it. And so again, these are all the stocks identified, not as many as the earnings one, because there's less stocks posting dividends and earnings, especially in the earnings season. But again, evaluating this strategy, we get a monthly return of minus 0.5%. But again, the S&P did poorly in this month as well. I think it went minus 1.63% or something, because remember it's the month before this month. So yeah, again, the strategy, although negative performance, it did outperform our benchmark. And then finally, the more the biggest strategy we have, because for this one, you can see I commented that out. We don't look at strong buy or buy. We look at every stock. This is the earnings reversal. So it's the opposite of trying to predict stocks that had good earnings. Instead, once a stock posts earnings, if their surprise is their surprise, which means their EPS posted was better than their forecast, then you buy the stock. Now, this is not what literature and like academia says works. You need to look at stocks that went down and had positive surprise percentage. Currently, we're only looking at stocks that had positive surprise percentage. We could easily implement this, but for now, I don't want to rack my head in. I'm graduating soon, so I'm going to work and grind this website so hard because it has potential, like so much potential, as we'll see in the results. But yeah, this one currently is not what academics and papers say it should be. But still, it's like a sort of, I guess, more broad version of this, right? Because you're buying every stock that beat earnings after earnings, right? Which kind of sounds counterintuitive because the way the stock would like match its potential, but sort of seeing if the market sort of undervaluates stocks that beat earnings in general. So that's a strategy. Again, not looking at 1 or 2 buy. You can see there's holds here and the sells 5 would be strong sell, so we don't care about the rank, we just care about the surprise percentage, and again, it has to be a past earnings, so you need to be buying it after its posted earnings. So yeah, these are all the stocks. I identify as way more, right, because we're not being selective on the rank. It'd be way less if we were. And then, yeah, again, this is just evaluating the performance. And again, remember the S&P had a bad month, so it was like minus 1.5, somewhere around that range. So yeah, a 0.2% return for the month isn't bad, considering the S&P was down nearly 2%. So yeah, that's a Python notebook. Runs every month on the 15th for those curious, so I can close that now. And then, yeah, this is the OBS. So now we'll move on to a website and show you what it looks like. So this is the current website. The version didn't change as I haven't made any updates or anything, but remember this is a new version, right? Because last month we had a significant rollout, so user requests. By the way, if you guys have any user requests, then just comment them down below, implement them pretty quickly depending on my schedule. But yeah, this was last month, so again, this is the main strategy, right? Big outperformance in the S&P over 2 years, and then the 3 sort of newer strategies as the dividend one, underperforming, earnings on underperforming but trending in a good direction, and then the earnings reversal one, again, underperforming. So let's refresh this every 15th. This is the weekend, so markets are closed, so I'm allowed to do on Saturday, but normally it's every 15th. And if I refresh, you'll see it's been updated. So again, we had a terrible month for the main strategy. It's quite aggressive. You'll see usually in market downturns, we seem to underperform the S&P, but in upswings or sort of choppy markets like this, we do better than the S&P. But on really bad months, it seems like my strategy just can't avoid the downturn. So something to consider if you're willing to follow this strategy. And this strategy is given to you for free, by the way. We give you all the stocks that we identify when running our backtest, but the S&P did poorly again. And now we are at, yeah, we're at less outperformance than we were before. So about 15%, I think, yeah, more than 15% over 2 years. So, which is so great, right? That's the average return of the S&P in about 2 years on average. So yeah, can't complain, even though this month was a bad one. Then the dividend one, again, this one is quite stable. Like there are downturns, but you expect this one to be the stable list, if that's the word, out of all the strategies, because again, dividend stocks quite safe, right? And yeah, you can see here the S&P had a bad return between January and February, and the dividend one had a slightly shallower bad return, I guess. So yeah, let me just check. Yeah, it's like negative 1 point, what would that be? Quick maths, 1.6, 1.56, I think. Anyway, the S&P, like we outperformed the S&P despite having a bad return on this. And again, I expected to underperform the S&P. It's quite a safe strategy, right? You're just buying stocks that are going X if they have a good ranking. So quite a simple strategy. And then this is the biggest thing I've been saying. Every month we do this videos, this is the strategy I run the most, like personally, and this is why, right? You can even tell here, it took quite a long time for our strategy to start outperforming, like nearly over a year until we were consistently over the S&P. So I knew this one was just a matter of samples, right? We had some bad months, but I knew this strategy is one that will outperform the most because yeah, this EPS percentage is really good. There's analysts that really focus on that specific sector, so they know something we don't. And if you buy like early enough, and our strategy buys about 3 days before earnings, it can have like positive returns straight away, even before the earnings, and then you can sell it. This strategy though is not what I actually do, which is like what I actually do is I buy 3 days before, and then if the stock has gone up like 4% before earnings, I actually sell it. But this one, no, it doesn't. It holds it throughout earnings, even if you're up like 4% pre-earnings, which would be huge, by the way. And you can see it's outperforming without a stop loss, without a take profit. So yeah, really good strategy. And I've said it month on month, this is the strategy with the most potential. And it's finally showing a light after this sort of bad September to November period. And we are now outperforming the S&P by about 2%, which is huge, right? On a sample size of not even 6 months, basically. And then the last strategy, the earnings reversal, again, this one, if implemented correctly, like papers and academia suggest, this one has a lot of potential. And again, the S&P, well, all of my strategies except for the main one outperformed the S&P, because yeah, this one had like, what was it, like a tiny 0.2% return, whereas the S&P did badly, but still again overall underperforming the S&P. So yeah, that is the monthly review, guys. Remember, comment down below any feedback you have, any feature requests, because remember, the last feature we added, let me see if the server is up. Yes, up. Wow, that is a crazy news article. But yeah, the last request we had was for sectors to be added, so we added it to this. But most importantly, we added it to. And by the way, this is refreshed every 15th, as you can see. So 15th of March, and we give this to you completely for free. This is the main strategy that I run, which had this outperformance as I showed you. So that's the main strategy. We give you all the stocks fully transparently, and yeah, remember we have added sectors here now, so you can filter by sectors if you think a specific sector is going to outperform. Remember, it's like 700 stocks here, so it takes a while to update when you don't have filters, but you can combine these with other filters, and that's just a great update, right? It combines the sort of data-driven aspect of my my research, all of that, and then you can apply like a discretionary touch, right? If you think aerospace is gonna outperform, or for some reason you thought the war was gonna happen, or Trump was gonna do something crazy, you can filter by all, and these stocks already outperform the S&P, so filtering by a sector that on top of that outperforms all other sectors, your returns will be crazy. Of course, more risk, since you do need to apply that sort of discretionary knowledge, which I will never do, by the way. I only stick to a data-driven approach, but it's just a nice touch, right? You can also order by sectors, so if I put all sectors back again, it takes some time to update because there are like a lot of stocks here, 700, but then yeah, you can see all the stocks ordered by that. You can order by whatever sector you want, and you can yeah, still filter by like symbol or EPS or rank if you only want the strong buys, which Jack says outperforms. And then if you want information on a specific stock, you can click on it, see the news, see the price, see the charts, you can put candle, and again, the sector is displayed now. So yeah, that's the video, guys. We had our monthly refresh, all strategies doing well except for the main one, unfortunately. And again, if you have any feedback on these videos or any feature requests for the website, then let me know in the comments below.